Today we're going to be talking about the equity hour and stop hunts. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Yesterday we had a couple of huge moves on pound New Zealand, pound Aussie, pound yen, and pound, all culminated in stop hunts, but gold had a massive run down. Today we're going to be talking about the equity hour. I've received a ton of emails and questions about the last two videos regarding timing and price and just the understanding. We talked about narrow range days yesterday. We talked about the high and low of the day, the high and low of the week, and the absence of hitting a previous day's high and low to be focused on the high and low of the day. Now yesterday we saw a couple of absolutely textbook perfect examples again of where the market broke through the previous day's highs, getting traders to chase that impulsive move into the London Open before they reversed it. Went sideways, dropped it down and put a middle structure in place, pulled back, and then performed a measured move into the US, beginning of the US session. The next part we saw 1, 2, 3, and then a 50 pip stop hunt within 15 minutes to half an hour, reversing and stopping out traders who had followed that move down. Just a reminder, October 15th, PEPPERSTONE interview with myself and Chris Weston, another episode of Professionally Speaking. Chris and I will be going through equity markets, gold, silver, futures, obviously the British pound pairs. We're going to be talking about the pending Brexit deal, how that may impact our trading, if we've noticed how some of the bigger trends are going to play out. We're going to look at oil. We're going to talk about the US election. Chris is an absolute genius. Honestly, the data that he compiles when he puts together his macro strategy is mind-boggling. So I encourage you to participate. It's a free webinar. Probably be 45 minutes to an hour with questions. And again, the link I'll put below. So a couple questions that I need to focus in on to, I guess, clarify the understanding of my approach. And now if you've been following me long enough, and I'm sure you've seen this, the speed of those moves are the trades that I'm focused on, and the timings around those moves, and trying to identify which pairs are potentially going to give me the best trade or the fastest trade, least amount of stress, with a fairly solid risk reward of at least 50 pips for 15 to 25 pips of risk. So coming back to our original premise, we talk about the high and low of the day. Yesterday's high, yesterday's low. We're going to go and look at gold after this as well, because gold was a textbook perfect example. But I'm just going to hone in today on the equities hour. So we've talked about our 12 candle window, 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m., and again, New York Eastern Standard Time. Now the equity hour is the middle hour. So if we have our first hour, second hour, and our third hour, we've got our 12 candles inside of this. And, pardon my drawing. But that 12 candle window often it sets the stage and allows you to identify the trade. Now I'm going to get a bit more specific today. We've talked about the 1, 2, 3 breakouts to the high or to the low. Now, typically speaking, I will look for that move in the first hour. We don't always get it in the first hour, or it may not be as plainly obvious to see to the naked eye in that first hour. But the most important thing is identifying a pair that potentially has gone to the previous day's high or low. Or as we saw in the pound Aussie, we'll talk about that as well. It had already broken out on a news catalyst from earlier in the Asian session, the RBA rate announcement. But then the second thing I'm looking for is which pairs are potentially at major round numbers, 50s and zeros. Because again, we talk about the consistency of these pairs trading off of major round numbers. Now sometimes and usually the pound yen is probably the most guilty of this. Occasionally we will see that reflected off of quarter levels, but most importantly we're focused on the previous day's highs and lows. Now that first hour, if that first hour makes a move, a 1, 2, 3, and again that may be 4 bars, they may have gone up first before they went down, 1, 2, 3, or they may go down 1, sideways 1, and down 2, 3, or down 1, up 1, down 1, 2, 3 into the open of the equities hour. The timings are what's important. So that first hour, the first hour in my head, unless I am at the very low of the day heading into the open or into the open of London or the US, if the market has already given us an engulfment at the low or the high of the day, as we sometimes will see in Asia or in London heading into the US, usually after a 3 push pattern, so we may see 3 legs up to the high, and typically that will be at the high or low of the week, we then may see a first hour trade setup. I've talked about that before with a 33 style trade. The third push to the high or to the low, engulfed, and then we'll get usually a little W structure with a pin hammer, or an M structure, pardon my drawing, with a pin hammer at the high for the sell. But that first hour in most cases will usually be that initial stop hunt to the high or to the low, expanding the range, usually taking traders in the wrong direction. So for example, if that burst ends up going down, in most cases I'm going to be looking for a trade long in that second hour. Now again, we're not talking about a market that's broken out. We're talking about a market that's bursting to the high or to the low. We will talk about breakout pullbacks in a minute. If the market breaks to the high in 3 bursts, I will be probably looking for a sell. Now, when that next hour opens up, they could still take that further into the stop hunt, as we saw in the pound Aussie yesterday. So the market had broken outside of its previous day's range and continued to move into the London Open. That brings us to our next point. In that second hour, okay, we may not even be at a previous day's low or high. We may be inside. But I want to know which pair is down near or at the low, or up or near the high of its current day. Now we can look to the left and look to identify where there may be potential gaps where the market's moving towards, but most importantly, when we get to that second hour, the next thing I'm focused on is the time. So we've talked about 1, 2, 3s. Now I'm going to be talking about, in that equity hour, 1, 2, 3, 4. 4 15-minute rotations. Now, I'm not going to go into depth about the 1-minute chart today, but I'm going to talk about the second hour and the importance of this, assuming we have not had a trade yet. The market is just now taking us to the low or to the high. Now, if the market was going down and the stop hunt was going back up, that's a different scenario, but I'm still focused on the timings, because that next hour, when they go 1, 2, 3, first candle, second candle, third candle on the 15-minute charts, okay, they may go back down 1 push, 2 push, 3 pushes back towards the low of the day. And in that case, we may be getting a third or fourth candle reversal for a bigger W structure back up. But if they go down 1, 2, 3, as we've seen in the London Open, down to numbers, to the low of the day, the previous day's low, what I'm now concentrated on is that first and second candle. Now, again, I'm not going to go into the depth on smaller time frames. It's not necessary, and in some instances we'll see the market move away in 50 pips from on the 15-minute charts in the US session in a stop hunt, and it's very hard to have taken that trade. But on smaller time frames, but even on the 15-minute, we'll often have one candle, whether it's down or up. So they may give us a down candle on candle 1. Traders need to be prepared if they have a reason to enter that trade long to trade the break of that bear candle. Now again, we're talking about a market that's inside of a previous day's range or at the low of the day or of the previous day. Same thing on the upside. That second candle, if it engulfs, and it may be a 50 pip candle as we saw last night, but in some cases we may see an engulfment and a pin hammer on that third candle. So again, we talked about the 3-bar structures on some of these pairs where the market will give us, pardon my math, a 3-bar structure putting in the low or the high of the day. We saw it yesterday in the pound Aussie. We saw it on a couple of the other pairs. The market races up to the high. We saw it a few weeks ago on the pound Aussie at the high of the day, 150 pip day. In that first hour, they went 1, 2, 3, and then a pin hammer at the end of the first hour. Traders are looking at this. That makes them afraid to take that trade. It was at round numbers. It was just below double zeros. The next candle dropped down, and from there the market fell 75, 100 pips. The timings of that equity hour are what's critical. So again, I've talked about when you get a 3-bar reversal in 1 hour, first, second, and third candle, that's the basis of a pin bar formation on the 1 hour chart. All we need next is a little candle, whether it's up or moves up, or even if it's a down candle, that still gives us our pin bar on the 1 hour chart. And that pin is the stop hunt down, one last grab into that range for traders that have gotten that trade right before it moves away. And as we saw last night in the US session, 50 pips in 15 minutes, half an hour. And even on the move down after they'd broken down, so the market engulfed at the previous day's high, pound yen pound, dropped down 25 pips and pulled back. So some traders have said, well, the move didn't happen until after the 12 candle window. You're right, but the trade happened at the previous day's high. They dropped it down 25 pips and pulled it back, putting heat on the traders who were short up at the high of the day. But now we have the middle structure for our measured move. And that's where we get our 50, 75 pip moves. That equities hour is so critical. And again, breaking that down, 1, no trade, 2, no trade, 3 bars, 1, 2, 3, 45 minutes, trade. Now, we may get an engulfment on the first candle of that equities hour. And in most cases, if we do, for example, we could get a move where the market comes back in the second candle of the equities hour for a short trade. Most likely they'll put a pin up there before they shift away. So again, there'll be a 3-bar structure with that pin being the last poke into traders who have either possibly shorted it at the numbers, maybe they've gotten filled down here, this puts heat into them, makes them second guess their trade. And I've talked about, if I am in the market and I've entered in at the close of a candle and I've got, whatever, 25, 30 pips depending on the pair, and I've got a target down here where it's the low of the day or where the London session was, or Asia, whatever, I'll often put my stop in place, my target, and I'll walk away for at least 45 minutes to 1 hour. Why 45 minutes to 1 hour? Because me sitting there could probably stuff up the trade, but also if you understand the game, we've talked about those stop hunts, okay, we're collecting this volume over hours. These stop hunts are 15, 25, 35, 45 minutes. So 45 minutes, 1, 2, 3, bang. I'm going to give this market 45 minutes to at least go to break even. If not, I'm going to sit there, I'm going to stress. Sometimes they'll sit around. Maybe I've gotten in and they're going to go sideways for half an hour because I got in early or something foolish like that. But if that's the case, if the trade is right, them sitting there is designed to shake me out. They may flash price really quick, 3-4 pips against me, and then drop it back down or bring it back up, whatever that is, if you're long or short. Those are part of the manipulation tactics to get you to second guess your trade even when you get it right. You have to understand you're trading with the other side. They're taking the opposite side of your trade. So you're trading with the people who are trying to take your money. So they've got a ton of tricks. They're the ones that can control the movement of price. They have deep pockets. They've got access to the back office, seeing how many traders are long, how many are short. Maybe we need to sit around and build up a bit more volume before we smash it and move it down. Or maybe they're macro factors. They've already generated that volume that they need, and now when the market's ready to open, they're going to move it to hit the stops one more time or to shake traders out of winning trades without going to the extreme. So again, they may not even go to the high or to the low. Because why? We talked about, say they've locked in the low of the day and they've gone up and now they come back 1, 2, 3. Okay, they may just be coming back into this guy without going all the way down. They come back into it, lock it in, and bang, they move it away. So sometimes they are not going to go to the high or to the low. And how do we know that? How can we tell? We don't know. But as time ticks on and that equity hour completes, if they've given us a trade setup, a 2-bar reversal, and again that first hour, if there's a 1-bar reversal at the beginning of that hour, and we're at round numbers like last night, we saw that 1, 2, 3 down, reversal bar at the open of the equities hour, bang, 50 pips. Those are the trades I want to be in. They're over super fast. Do I get them all the time? No. Do I make mistakes? Absolutely. But the more often that I wait and I'm patient and I allow the market to move, do you notice the timings? The market's slow and quiet, and when they're going to go to work, bang, all of a sudden it moves. And when it moves and it's going to do a stop hunt, why all of a sudden, after 6, 8 hours of going sideways and back and forth, can it move 50 pips in less than 10 minutes? Because there's an organized design to this market. Timings are critical I think for the retail trader to protect yourself from getting caught into markets that are designed to trap you into positions that are going to potentially be taking you either in the wrong direction or making you sit in those positions without them showing any profit or very little profit. Excuse me. Hard to get out of at break even because of the movement back into the move. So they go a little bit and they come back, go a little bit and come back. Not enough to get out with any money, not enough to go to break even. And then in one flash, when the timings are right, all of a sudden they come to life and bang, bang, bang. They go to the high, they go to the low, they lock it in, or they break out and they pull back into the move, stop hunting back into traders that are already in that move before shifting it away or hitting the high or the low one more time. And again, that equities hour is so important. So let's take a look at the charts. Equities hour, critical. Again, unless we're at a 33, high or low of the week usually, and after they've locked in a high or low of the day. How do we know that may be locked in? Because it's already been, there's a peak formation in place, and that stop hunt only goes into that move and moves away from it in or before the equities hour. Let's take a look at some charts. Thanks for all the great comments and feedback. And again, October 15th, PEPPERSTONE, Chris Weston, and myself. The link's below. If you want to log in, it's going to be a fantastic night. 7:30 Melbourne time, which is 5:30 p.m. my time in Perth. You can Google that. I think we're GMT plus 8 over here, but I'll put those times in the box. Reserve your spot now. Thanks for the questions. Keep them coming. This is a winnable game. Stay disciplined, stay focused, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion. Again, we've been building the last few days on timings, the high and the low of the day, and today we're going to focus specifically on the middle hour, the equities hour, and just highlighting and reinforcing again. We talked about the previous day's high and low. Yesterday's a great example of a trade that occurred after the RBA, Reserve Bank of Australia, and we had the pin bar go down through the low of the day, through round numbers in Asia, and then just at the end of the Asian session we had a breakout which went through the previous day's high, consolidated at the double zeros, and then proceeded to go continuing long 1, 2, 3 inside bar, and then the London Open, so our equities hour, again breaking through the next the 50 round number level, and again 1, 2, 3 at the high of the day, and inside, not quite an inside bar, but today we're focusing on the equities hour, the middle hour, and I believe fundamentally this is the most important time, because this is where the market will often, we see we're in a breakout here, but the market continued to extend that high out. And again, just timings wise, if you think about, we see the 1, 2, 3 on the first hour. Typically we want to see that come outside of a consolidation, hitting the previous day's high or low, but we had a catalyst from the news that carried this forward. When they went higher and then continued that move higher in the London session, mentally, again, I keep emphasizing rotation, that hourly rotation, 1, 2, 3, the 3-day cycle, the 3-bar cycle. We're into the London Open, 1, 2, 3. Now, again, I'm not going to go into depth on the shorter time frames, but again, through the 50s, traders on shorter time frames, we'll see that there we can actually blow that up. And we'll zoom in on that from yesterday. And you'll see we're going to talk about this for the U.S. session as well. Okay, timings wise, we are at the second candle right here of the London hour. But more importantly, we have a structure in place, a middle structure, so the markets come down to the numbers and then proceed to go back up, 1 push, 2 push, and then a 1, 2, 3. An engulfment, dropping down sideways inside of that middle structure, but we also have now a smaller geometrical structure consolidating at the high of the day into that third candle, and then we come back to the numbers, it breaks through the lows, consolidates and engulfs, and continues that move down. Now, again, I talked about not going to shorter time frames, but understanding the timing effect of this equities hour. Now again, this market comes down, and you'll notice as we've gone higher, there's no middle structure. So the market, for it to fall through, which we can get occasionally with certain types of peak formations, but the market falls through and pulls back. Now this is our high-low, and then now the market has middle structure to consolidate and trade back through. And if we put our measuring tool on there, we'll see that it completed a 1.5 expansion. So again, we come to the equities hour, and a few traders have asked about the U.S. session. In my mind, we're obviously not near the previous day's high or low. The low when we come into the U.S. session. But the important thing again is timings. Now, just to come back, we see that the market's gone up in that first hour, so we have a low in place from that first hour. London puts a high in place. They put a higher low in place, and then another swing low, getting traders to chase. This bar was a bull candle at one point. It pins up into the numbers, stop hunting traders who have shorted off the numbers up top before dropping down and then moving down below the middle structure. But again, the equities hour, we get to the 1, 2, 3 into the equities hour open to the 50 level again, Just at the beginning of the equities hour for the New York session, the middle hour, the market reverses. Again, traders on the shorter time frame would have looked to see some sort of reversal area at the numbers, the perception being the market was going to head back through the low of the announcement candle. And again, different ways to trade this, but as we see, this is a 1-bar candle that's gone 50 pips back through to stop hunt traders who have shorted that move. But again, the equities hour. So again, you can go and look at your charts on the shorter time frames. I'm just not encouraging that, but even the engulfment, if you trade this, there's still going to be heat. Or if you trade this, you can fight for a better price. You're still going to have a 1-bar stop or a 20, 25 pip stop. Point I'm making today is not to say that all these are tradable or that you're going to have an equities hour opening trade each time. This was the low of the session after they put a high in place. So they've pulled back. The first candle forms a high, a peak formation, and again, you can go and look for these on your shorter time frames, but we have a profitable trade. So where is the money? We get the engulfment. They get the pin, which on a shorter time frame, you'll see the W formation and the pin hammer for the stop hunt back up. Today, classic day 3, we're inside of the middle of the previous day's high and low, and again the US session high and low. The market will tend to often trap traders on these days. It can be a frustrating day. You get caught in this chop, it starts to move and then it doesn't go anywhere. Or the market in the London hour, the equities open, engulfs, 3-bar engulfment, 1, 2, 3 up, pull back, hits it a second time and goes sideways and engulfs and fails to follow through. Now we have a stop hunt heading back towards the low of the day from yesterday's US session. But again, we're inside. And so inside, I try not to counter-trend the peak formation, and I'm quite often happy to sit aside on these days. My favorite trades come when these previous days' highs and lows are broken. Now, I actually would consider there was a few other better options. Again, just emphasizing the equities hour on the pound Australian, not to say that that was a trade that I took. I didn't take that. But again, a classic example. We get the 1, 2, 3. We hit the previous day's high. They continue the move. So we have our first hour is up. No indication of a trade signal, no engulfment, no pullback, anything like that. And then the London hour proceeds to go through to the double zeros, and we get the 1, 2, 3 reversal on the pin on the third candle. Again, other traders will look to short it up top on a shorter time frame on the double zeros. Again, you're looking at, if you're filled up there, you're looking at a maximum quarter level stop, if not tighter somewhere on this shorter time frame. And again, the market comes down 40 pips right off the bat, depending on what their fill was. They may have got 50 pips, puts a middle structure in place and proceeds to perform a measured move down. We get into our equities hour, the market pulls back. This is a golden setup. We know that when they come into the 12 candle window, they're going to hit these stops again. They come back down 1, 2, 3 to the low of the day at the numbers, engulfment. They pin the numbers, boom, 50 pips. Again, the importance that I'm trying to emphasize is timing. So if you're in this trade, fantastic. If you're not in the market, there may be opportunities, but I am very happy to wait and look for that specific timing for the equities hour. I look to try and identify trades that are going to move very quickly, be in and out, and not have to sit and nurse and wait on a trade. I do not like to do that. I don't tend to like to be at the screen. I find the longer I'm at the screen, the more likely I am to look for poor quality setups. And again, looking at the pound yen, another example. Again, we broke through early in the session, then Asia consolidated, and again 1, 2, 3 they pin to the high at the London open candle. Again, hitting the high of the day, so they're at the previous day's high, which false break reversal failed to follow through. They go into consolidation, and they hit the high one more time, and they engulf it, and second candle engulfment, third candle pin hammer. So again, not a fast moving 50 pip trade, but we have locked in the high of the day. Again, traders, if you understand, you are going to get a pullback most likely after this hour's completed trading. They go down to the numbers, they pull back. If you understand that you're in the right move, you'll sit on that trade. Other traders may have been filled when it broke to the high of the day. But again, we come to our equities hour, and just to emphasize, again, not suggesting, again, I liked the pound Aussie because it went to the low of the day, pound New Zealand. But in this particular case, we see that the market failed to go down to the low of the day, currently in that 12 candle window, and there's a reason for that. So again, we get traders caught shorting the market on the continuation in that 12 candle window. We get the double inside bar at the equities open, the second candle, and then the stop hunt back up. Now, round numbers, the trade is down. They don't follow through to the low of the day. They stop hunt back up before they come down, but they go into consolidation at the double zeros. Very important to notice. Again, we get our first mouse engulfing the little bull candle. Market comes back one push, and then two pushes, and then a third push and an inside bar. Again, timings and the stop hunt, and they continue to move back down. Again, today you'll notice that right off the bat, they broke through. They continued to move down. They worked it down, pulled it up into the Asian 12 candle window. They get traders shorting the market into the low of the day, into that equities hour before engulfing in the last candle of the equities hour. And we have our middle structure for geometry. So you can see the W formed at the low of the day. And now we also have our middle structure for a measured move. This is just, again, visually, we're on a Wednesday, we're at the low of the week. We get our measured move for traders in Asia. And again, timings wise, we see the first hour approaches the 50 level. We got sideways structure, pin hammer. We see profitable trades from last night. The market breaks out in London. So we get our first candle, second candle, third candle goes through the quarter level, fourth candle up top. So we get a 1, 2, 3, and a fourth candle up top. So the London hour extends the move, goes into consolidation, and even now that we're into the gap time, it's possible we may see a stop hunt back towards the high of the day in this gap time. So we have one push, we may see two push, three push, and hit the high for a move back down towards the low of the day or the week. Time will tell. Looking at the pound, we see very similar setup to the pound yen. So the blue line, again, just below the double zeros. This is almost a dead giveaway if the market stays in consolidation that we're going to be penning up to double zeros. We get our first hour sideways, and then London pins to the high of the day, hitting stops, engulfing pin hammer similar to the pound yen, moves down, pulls back, gives us our middle structure. So again, trapping traders long before rolling over and hitting the stops. Same as the pound yen, they do not follow through to the low of the day in the US session 12 candle window, but they aggressively stop hunt back up into the traders who shorted the market before consolidating at the quarter level and then falling back through the low of the day. Just again emphasizing the equities hour. The equities hour. Equities hour. London and New York, you'll often see the stop hunt. So that first hour is the setup. They brought them higher in the London Open to sell it off. They brought them down into the peak formation low to stop hunt back up. And we'll take a look at gold. So again, last night we see, wanted to show this particular low in London. So again, we have our high of the day and our low of the day. No previous day's high or low hit in the London session. And again, gold, we'll look at today it moved in Asia. It doesn't often move in Asia, but it can move in London. It can move in the U.S. But this particular trade setup, we'll go back and we'll look at Monday. This is the exact same 3-bar reversal off the previous day's low. This was off the low of the day, just a different timing window, same trade. They go back to the previous day's high in the U.S. session. And we'll just click this off. But again, timings. We're below the previous day's high. First hour stays just below the previous day's high, and they go 1, 2, 3. Third candle, equities hour, they pin into the 50 level. I'm not sure if that's a 50 on the gold. 19, yeah, 19. 118. They pin to the numbers on the third candle. Again, on the shorter time frame, there's a little rectangular structure engulfment. But they engulf, go sideways, the pin hammer, again at the quarter level, and then proceeded to drop, I believe, around 180, 190 pips. Back through the low of the day, big move, consolidate, and fell through even further, took out the previous day's low. Equities hour in London did not, it pinned up before taking out the low and engulfing, going back, and then in the equities hour, 1, 2, 3 to the high before dropping back inside and then falling through the low of the day. Similar to the pound yen, we see that the gold in Asia, they brought it up to the round number level to sell it off, and then we get in our equities hour, we get a 3-bar stop hunt to the low of the day, and then the small bar, the engulfment, and then the move back. And again, high and low, middle structure, we get our measured move, and we get 2 full expansions, which is a stop hunt back into the trade from yesterday's session. We get first hour moving back up strongly, and then we get the first candle of the London session, and then the second bear pin hammer at the quarter level. For at this point so far, putting in the high of the session, and we have 1 push, 2 pushes, 3 pushes down before they've pulled back. This market could fall over, or we may see now after 3 pushes a retest of that high from the beginning of the second candle of the London session. So again, my emphasis is on that equities hour. I let that first hour set the tone. Again, you'll notice in gold, same thing. They went up to sell it off in Asia the previous day. They went up in London, sold it down to the low of the day. They went up and hit the previous day's high, dragged them higher in the equities open to sell it off, dropped it down in the equities open this morning to buy it up, brought it higher into the London open to sell it off. Have a great trading session. Hopefully you got some value out of today's video, traders. Again, that equities hour can help us identify some fantastic opportunities at the low and the high of the day for the very fast stop hunt back into the trend. And again, we get middle structures. If we have a measured middle structure, we can get a measured move that can offer us some good risk reward. Stay disciplined, stay focused, and may the markets
Hi
go
traders,
with you.
it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.